Hey guys, this is Alex from MarketWise Asia. So I was supposed to do the Facebook Live, but because I had a family event, so I can't really do it live, but I've decided to do a quick video to give you a market update and what's my opinion of the market for the upcoming week. Okay, so let's get started over here. Alright, so as usual, a disclaimer first, whatever I share in this video is just for education and informational purpose. It is not a recommendation to tell you what to buy or what to sell. Okay, so I could be wrong, so please do your own due diligence. So as usual, okay, we have MarketWise Asia has several social media accounts. Do follow us on Telegram channel, YouTube channel, and also on Twitter as well. Okay, so if you're watching this on Facebook, you can see it in the first comment of in the link. Okay, you can see the link in the first comment, and if you're watching this on YouTube, you should be able to see all these social media link in the description box. Okay, so let's get started over here. So there are several things that I want to go through. So let's have a recap of what I mentioned actually last Friday on the Facebook Live and also the YouTube stream that is on the 24th of February. Okay, so I basically mentioned about the potential reversal of the equities market, that is the stock market. Okay, so I mentioned about the VIX over VIX ratio and also the VIX itself. So by anticipating that there could be a reversal on this VIX ratio and the VIX, okay, it can also help us to anticipate on the turn of the stock market. So let's have a recap on what I mentioned about this VIX ratio and the VIX last Friday. So this is based on the VIX over VIX ratio over here. So I mentioned about the star signal. Basically, star signal is the kind of a reversal signal over here. So it gives us a potential, anticipate a potential reversal. Okay, you can see that whenever there was a star signal on this VIX ratio, you can see over here, then there's a star signal, then you head up, okay, then the equities will also go up. When there's a star signal, equities also go up. When there's a star signal reversal, equities also go up. When there's a star signal over here, okay, it kind of go up over here. So last Friday, I actually mentioned that there's a potential over here. So you need to understand that last Friday was actually on the 24th, which is over here, This this vertical line, this blue vertical line over here. And as you can see over here, price actually, didn't really, the VIX ratio didn't really, head up in a V-shaped recovery, but instead kind of consolidate over here. But the good thing is, it didn't go down further and it's starting to grind higher up. As of doing this video right now, the VIX ratio is actually up about 2% right now, which means that in fact, the equities market, the stock market has been up for the past 2 days when the VIX ratio actually went up higher. Okay, so this is the potential potential reversal that I talked about last week over here. All right, and also on the VIX volatility. Okay, also the VIX thing. Of course, it's the fear index, right? So I mentioned that there's a potential reversal over here. So the previous one, okay, the red star over here was over here, then VIX just came down over here, then VIX came down, and it's over here, then VIX came down. And last week I mentioned about this potential over here, that I said that the VIX based on this star signal, it might come down early this week. If early this week, okay, somewhere around the 28 or the 1st of March, okay, you can see that last Friday was actually the 24th of February over here, right? I put this vertical line here. I say that the star signal is somewhere around here. Okay, early this week, the VIX could come down. So you can see that VIX really did come down, and which means that it's a fear factor. Okay, fear gauge. Okay, so which means that when the VIX is down, okay, it has an inverse relationship with the stock market. When the VIX is down, okay, the equities market tends to go up, and when the VIX is up, the equities market tends to come down. Okay, so it has an inverse relationship. Okay, all right. So it is right now, the VIX index is below 19 right now, already below 19 right now. So all right. So this is what I recapped last week. Okay, so this upcoming week, right? Okay, you need to understand that there are the power is speaking also, and there's some economic data release. Okay, let's go to the Forex factory right now and take a look what are some of the things that you need to take note in this upcoming week. Upcoming week, it is the the 6th of March to the 10th of March over here. All right, so can see over here, this is the USD. Okay, so on the Tuesday, on the Tuesday, power is speaking on Tuesday 11 p.m. that could move the market as well, so you need to take note of the market. And also on Wednesday, there's this ADP non-farm payroll that is coming out, so you need to take note of that, and also the jobs opening on that. Okay, all right, so on Friday there will be the non-farm employment change, unemployment rate that's coming out. Okay, don't ask me how will all this affect the market. Okay, generally, you can take a look at Forex factory. Basically, when the unemployment change, I don't know how the market will react, but this is not the thing that I'm concerned about. Okay, I'm more concerned about after the data is out. Okay, there will be volatility. Okay, there will be volatility. So you need to be careful. Okay, on this market moving kind of event. So you need to know when all this economic data is coming out. All right. Okay, so let's go back to here. All right. So another thing you need to take note is that, in fact, February price, the index did not close above the central pivot range. So I mentioned a lot of times, right, for it to turn into a confirmed uptrend, price must be above the CPR, the central pivot range, for 2 consecutive months. I mentioned before, so let me try to search it. There's a lot of things over here. Did I mention it? Okay. All right, so I mentioned that no price above the CPR for 2 consecutive months here. So for those who are new here, what do I mean by 2 consecutive months over here? So let's head back to the index right now. So let's go to the S&P 500. Okay, so I add in the central pivot range. I remove the cloud. Okay, so I always use the COVID crash as the example over here. So in 2020, when there was the COVID crash, all right, so this is 2020, this whole thing is the COVID crash right now. So the green lines here are the central pivot range. Okay, all right, so can you see that generally when it's on uptrend, price will respect the central pivot range and such. Okay, respect it when it's overall in uptrend, but when it's down, okay, it will normally below the central pivot range over here and now. And when price is above the central pivot range for 2 consecutive months, okay, that's when the bull run will start. So can you see that in 2020, all right, price, this is the first month, price closed above the central pivot range, and second month it closed above the central pivot range for 2 consecutive months. So subsequently, there was a bull market. Okay, and the rest is history. Okay, all right, so there are several more examples over there. Okay, but I won't go through them again. All right, so let's focus on what is currently happening in the market right now. So I was anticipating that February price could close above the central pivot range, but it didn't. Price didn't close above the central pivot range. So you can see that in January, all right, okay, price actually closed, month end closed above the central pivot range. All right, and in February, price didn't close. It didn't close below the bottom of the range of the central pivot range, but it is staying within this range as well. So the key thing is it didn't close above the central pivot range. Close above means must be above this green dotted line over here. So price didn't close above. All right, which means that for it to be a confirmed uptrend once again, we might need to take until May, because this month is the month of March. Okay, this month is the month of March. So let's say, for example, March is a bullish month and price closed above the central pivot range. That's the first month. Okay, and then need to wait for April to close above the central pivot range for 2 consecutive months, then you can safely say that, you know, May onwards, then we are in a confirmed uptrend. So right now, still not really confirmed, but generally, okay, we can see that the market is still forming a higher low. This is the absolute low in October, and then we are still forming a higher low. So this is still a good sign, but I really want it price to be above the CPR for 2 consecutive months. Then I can safely say that, you know, at least we have really turned into an uptrend. So I hope you guys can understand that. I actually mentioned this for quite some time, many times during my Facebook live. Okay, so this one to share about. Okay, and then the key index, key resistance heading into March. Because before I talk into the key resistance first, just to let you know that actually, you know, how is this month performing? Okay, for pre-election year. So in fact, for pre-election year over here, all right. So you can see that, you know, pre-election years tend to bottom in late February. So this is from Carson Research over here. So they have the data over here. Okay, so just for fun, you can take a look, you know, and from generally from February to March is kind of you know, it's a down month over here, and you can start to, you know, pick up again at the start of March again. So, you know, if you are talking about seasonality or even based on pre-election years historical data, then okay, on March onwards, it tends to be a more bullish month heading into March and April as well. So the seasonals, okay, and the historical data, it is, you know, favoring us at least for now. Okay, so let's go to the market right now. So this is the S&P 500 over here. So, you know, as I mentioned, this VIX ratio over here, when the VIX ratio turns higher over here, which means that, you know, we can expect the equities market, the stock market, to turn up higher, which is in this case, okay, the S&P 500 indeed turn up, okay, indeed turn up right over here. All right, so let's add in my usual indicator with all the pivot points and the cloud. All right, so this is the cloud plus the this is the cloud plus the pivot point over here. So market has been pretty bearish for the past, you know, 1 month. For 1 whole month over here, the market is undergoing a correction right now. So market is starting to turn, which I, you know, anticipating that. Okay, but the market is actually pretty tricky. So when I think that the market is going to turn somewhere around here, okay, it just came down again until the start of March, okay, which is actually on the 2nd of March, then price really turned higher. All right, so if you actually look at the spot index, the cash index for the S&P 500, this is SPX over here. All right, this is the cash index, okay, not the futures. You can see that, you know, there was a hammer candlestick pattern over here, and I believe it actually faked a lot of traders, amateur traders, to go long, thinking that, you know, it could be a reversal. And this is the reason why I mentioned to you guys before, whenever I see a candlestick like hammer or shooting star, I tend to be skeptical, you know, because, you know, it is too obvious. Or people see that there's a long shadow over here, you know, they get excited thinking it is at the low over here, and they go long, and shortly after they went long, okay, and price reversed back down again, you know, and hunted their stop loss just below the low of this hammer candlestick pattern over here, because this is a very common stop loss area over here. And then once, you know, they stop you out, okay, and then price reverse back up again. All right, so this is pretty common. That's the reason why I say I don't like to see this kind of hammer candlestick pattern, and I don't trade that. So that's the reason one. This is the reason why. So I hope you can understand that clearly now. More and more examples that's showing up over here. So right now, I'll go back to the futures right now. So this S&P futures. So we are up for 2 consecutive days already. So where is the next resistance that we are heading to, which is pretty soon? Okay, I think that by early next week or so, we should be able to hit, okay, the 4040 mark over here. All right, 4040. This is the pivot point over here based on the S&P 500 futures, 4040, and I believe that this will be a strong resistance again. Okay, we need to see how the market will do, okay, will react when price hit this level. Okay, a price could have a sell-off again, okay, which could be, I don't know, or it could price just can ping pong and then hit higher up again, or price could even just ignore this pivot point and just burst through this and hit higher again, which I doubt so. Most likely, I believe the most probable thing to happen is that price will hit the CPR, hit the pivot point, and then kind of do a correction over here. Okay, all right, and how it goes, I can't say for now, but let's say for example, if you have a long position and you entered maybe somewhere 2 days ago when price hit this central pivot range, the CPR, the pivot point, then you might like to scale out your position, take some profit off the table, etc. So do understand that 4040 will be a key resistance level to watch. All right, so then after which we have to look at the market internals and see what the market is telling us, what the market breadth is telling us over here. Okay, and if you're looking at the Nasdaq futures over here, take a look over here, Nasdaq futures, okay, it is also basically telling us the same story over here. We are also hitting near the pivot point over here, which is at about 12310. Okay, this is the Nasdaq 100 futures, 12310. The pivot point over here, there will be the resistance, so do take note of that. Price might stall there, take a break or whatsoever, so do know your risk level over there. Okay, all right, so let's take a look there, and some key sectors and industry to watch, right? So I'm basically looking at certain sectors and industry based on seasonals. All right, PBJ is this food and beverage ETF over here. XLP is the consumer staples, which is a defensive sector, and IYR is actually the real estate. Okay, or can use XLRE, that is fine as well. So basically for the PBJ food and beverage industry, right, typically in March and January, okay, they perform pretty well. Okay, so can go to these seasonals from stock chart. Okay, can key in PBJ. Right, PBJ is the Invesco Dynamic Food and Beverage ETF over here. Then just click go. All right, can see that for the past 5 years, can see that March, April, it tends to perform really well. In fact, for the past 5 years, April it closed positively 100% all the time for the past 5 years. In fact, for March, it's also performing not too bad. If you go through more years, generally they are still performing pretty well. For the past 10 years, since in March, it also performed pretty well as well. So you might want to take note of this, food and beverage industry. So what are the stocks in this ETF? What are the component stock in this ETF? So you can go to this ETF.com/PBJ over here. All right, can take a look. Okay, so you can see that it just comprises of the exposure of the top US 30 stocks in the F&B segment over here. Okay, just have a quick look over here. PBJ, where is it? Let me try to refresh again. Okay, so this is the top 10 holdings over here. You can see that Coca-Cola, General Mills, Hershey, Archer Daniel, Pepsi, Kraft, okay, Del Monte. All these are the F&B companies. So you might want to take a look at these companies and keep them in your watch list. Okay, all right. So another two sectors that you might be watching and to be in your focus list, in your watch list, is the consumer sectors. Consumer defensive sectors, consumer staple. This is the XLP. So typically based on seasonal data, right, from March the 13th, okay, to April 18th, for the past 16 years, okay, 15 years, it is positive. All right, for the IYR and the real estate XL or XLRE, I only have data for the IYR, but basically it is the same. It's talking about the real estate sector. So it is from the 8th of March to the 27th of April. Out of the past, 17 years, 16 years out of the 16 years, it is positive. 94% of the time, okay, it is positive. So you might want to take note of these three sectors in this early March, okay, all right, to keep that in your watch list. So let's take the XLP over here. Go to the stock chart seasonals as well. You can go to XLP. All right, can see that for the past 5 years, it is performing pretty well, XLP. All right, and then for the real estate ETF, okay, for the past 5 years, it is normal here, but if you actually drag longer the data, right, it is performing pretty well. Okay, I just put that for the past 10 years over here, it is also performing not too bad. Okay, not too bad. All right, so you might want to take note of these three sectors over here. So all in all right, just a quick summary over here. Okay, so what I recapped last week, I anticipated that the market could go higher this week, okay, which indeed the market has already went up, okay, during the last 2 days of this week on the Thursday and Friday, which is as of what I'm doing this video right now, it has already gone up. So you might want to take note of the key resistance which I mentioned just now, and also this upcoming week from the 6 to 10, there are some economic data releases, okay, and then the power is speaking as well. So you want to think that these are market moving event and data release, okay. And for February, price did not close above the central pivot range. So let's say if you want it to close above the CPR for 2 consecutive months, we have to wait until May, then we have a confirmed uptrend. And as I mentioned, right, there'll be index key resistance heading into March. So for the S&P 500, which is heading into 4040, right, 4040, somewhere around there, there will be the key resistance, which I think is going to happen in the upcoming early next week. So do know your risk, okay. So that's all for today. I just do a very quick video, so sorry for the kind of incoherent kind of data structure and content structure. So yeah, and right now as I'm doing this video, it's actually 1:15 a.m. in the morning, okay. I could be a little bit tired, so thank you guys for watching. All right, so do subscribe to our YouTube channel, okay, and also the rest of the social media channel as well. So thank you. I will see you again next week. Bye bye.